You're live. What is up, fam? Hammersaw, I love you, dude. You are so off base on this. You have a homework assignment tonight. You have to watch 30 minutes of CNN and read something on MSNBC. Sorry, but that's your homework tonight. We all have to literally go out of our ways to read a perspective that we don't agree with. Otherwise, you just live in your own echo chamber. So calling you out because I think you need to do it tonight. And then DM me. We'll talk about whatever you want to talk about. But before that happens, we are joined by one of my favorite guests that we've ever had on the show. That's why he's on for the second time, Dr. Jeff Ross. How you doing?
I'm doing great. Thanks for having me on, Q.
Of course, man. I'm going to just sort of dive right into it with you. We've seen CPI inflation hitting new all-time highs yet again. We have PPI inflation now hitting double digits, the first of these inflation numbers that they're willing to tell us is double digits. We finally get our first Fed interest rate hike. And by the way, the market seems to have corrected itself and found a bottom, because that makes sense in the midst of global conflict in Eastern Europe. I will let you tell us, what is it that you're paying the most attention to right now?
Yeah, so great. Thanks again for having me on. It's fun to be on your show. You guys are just doing awesome work with this. Let's see. So where are we right now? So my view hasn't changed much, to be honest. I was bearish the last time I came on. I've picked up the nickname Dr. Bear on Twitter, and I'm okay with that because at some point I'll flip, and that will be like a big party day for everybody. We'll pop some champagne. I'm still bearish. So what does that mean? I think that the economy is continuing to decelerate, and now it's becoming more and more obvious to basically anyone who's paying attention. It looks like we peaked in Q4 of 2021, and now we just are going to have a series of worse and worse year over year economic comparisons. So that's the economy. Number two, inflation. Inflation is just raging, as everybody knows. It's making quality of life miserable for everybody, right? Your gas is expensive. Your groceries are expensive. Housing is going up. Everything is terrible. That's the huge drawback of inflation that most Americans don't understand because they've never lived through it. Most people aren't old enough to have lived through the 70s. I was born in the 70s, so I don't remember it. I do remember just kind of slumming it as a little kid, and that was just kind of how everybody lived back then. So I think we're living through a slumming it decade. I think the 2020s, unfortunately, are going to be marked with tumultuous geopolitical events and rising prices and a stagnant economy, so stagflation. So what is inflation doing? I think we're basically at or near a peak right now. Could we go higher? Could the March CPI and PPI prints be higher? Sure. Could April? Possibly. Here's what I think is going to happen. Wait, I'll tell you what. Here's what I'm going to think in just a second. Let me finish this. Third, we have the Fed still talking about tightening. So they raised rates 25 basis points. I think they're going to continue to raise rates. Why? Because they have to. Because inflation is so high right now. They have to let the markets. They're going to sacrifice the markets for inflation. That's the politically most powerful thing to do. That's what Biden wants. That's what the White House wants. Now, if it were Trump, I would think a totally different thing. I would think they're going to say, screw inflation. We're going to prop the markets because Trump wants to get reelected, or something like that. Trump's not in anymore. Biden's here. So that's what I think the focus is going to remain, is on inflation and how do we tame inflation. Whether or not that even actually works, whether or not the Fed truly does have control over the over inflation, I'm very skeptical of that. So that's what we have. We have the Fed tightening into a weakening economy with really ugly inflation metrics. What happens when that happens? Risk on assets don't do well. So what have we seen since November and December of 2021? A series of lower highs and lower lows. Basically, we're stair-stepping down, down, down. Every time we go up a little bit, the optimists come back in full force. They call me stupid. They say I was wrong. And then we hit another high, lower high, and then we go down again. So what I'm doing is every time we ramp up, just like we did last week into Friday, I took that as an opportunity Wednesday, Thursday, Friday to short things. So I was shorting tech stocks. I was shorting small cap stocks, shorting the Qs, which is NASDAQ. And I was going long again, increasing my positions in energy, increasing my positions in things like gold. I'm still on the sidelines with Bitcoin, basically because, so I never short Bitcoin, right? And I never, ever, ever, ever recommend that people sell Bitcoin. Make that very clear. Don't sell your Bitcoin. But if you're a trader, I still think it's in a bearish momentum, a bearish phase. Clearly, to me, it is. And so anything when we get these local highs, I think that's for people who must trade. I suggest shorting things like Ethereum, shorting things like Coinbase, shorting these crypto exchanges. If you want to, you can even short miners. Some people have issues with that. I don't, because I'll turn around and go long them once we bought them. So that was a really long answer to say, you mentioned at the beginning, we had a nice recovery. Yes, but I think it was a relief rally, a bullish relief rally within a bigger bear market. And I think we're going to go down further with risk on assets.
I'm so glad you said that, because I did the hardest thing any trader can do. And I sat on my hands watching that. Friday was the worst day, but I know Chris had something to add, but I just wanted to say, thank God I sat on my hands.
Yeah, for sure. Jeff, always a pleasure having you on. So I guess going into your macro view, and not to get political with it, but we're obviously going into very tumultuous times. As many people know, in the United States, there's the midterm elections in November of this year. So while they have to raise interest rates to quell inflation, I don't know if 25 basis points really beats 7.9% inflation clips on the CPI index, but they're going to attempt to do this. I guess my question is, while inflation's running hot, politicians are trying to scramble for votes this year, and people's obviously 401ks, IRAs, 403bs, whatever it is, or even their Bitcoin holdings, they might go down in value because of this bearish sentiment and everything that's going on. Like, what does this lead to? And, obviously you see a bearish sentiment. How do we come out of this, basically?
Yeah. So I always tell people when they ask, first of all, thanks, Chris. Thanks for having me on. Great question. I always tell people to know thyself, right? So I get asked questions all the time, but I want to know first, who am I talking to? Who's my audience? So are you a short-term trader or are you a long-term investor? Because those are two totally different ways to approach a situation. So when you hear people like me, who I trade for a living, because for Vailshire Capital Management, I'm managing volatility for my clients. They hate to see their accounts go down too much. They don't like fluctuations. They're into Bitcoin kind of, because I've been teaching them about it for about 3 years now. But they don't want to go down 80%. They don't want to see their life savings go down 80% if we have a huge bear market kind of thing. So what I'm doing is trying to hedge against that downside. So for people like me, when you hear a trader saying that, look, I think that the next several weeks and or months are going to be kind of ugly, you can come up with strategies, and I'll tell you all about strategies for how to handle that. But long-term investors, on the other hand, should be salivating, right? Because the price of your favorite asset, the king of asset, Bitcoin, literally the greatest asset that's ever been created, that we'll never see a better asset to buy and hold in our lifetimes. When the greatest asset of all time gets cheaper in price, you buy more. That's just literally what you do. You don't think about it. You're like, oh, well, what if it goes lower, blah, blah, blah. I'm like, great, dollar cost average. And if you think that I'm right and that it's going to go down and then probably dip at bottom and then start going up again in the next few months, you should be doubling your dollar cost averaging right now, because this is the low point. When we go back, say 5 years from now, we're going to look back at this time period and we're going to be like, do you see that teeny tiny little dip right there? That's where we were all stressed out, wondering, if it was going to go to zero and what we should do. I should have bought everything. I should have, sold my carpet, sold my chairs, sold my ceiling fan, sold my lamp and my lava lamp right there. I should have done all of that and bought Bitcoin at that price. So that's how I view it from a long-term perspective. You should not care at all about this kind of stuff. When traders are selling, long-term investors should be buying, and vice versa. When traders are buying, long-term investors usually sell into those things. They sell into strength. And that's just how markets work. So understand who you are, understand the kind of market conditions. Instead of panicking, start salivating when you see the price go down and start buying more.
I think it was, I'm stealing this from, I think, Carl Icahn, where he said, once I started approaching the markets where if the news was sell, we're in hell, I was buying up everything. And when everyone was, oh, we're going to be rich, it's going to go up forever, that was the moment I knew to start selling. And if it works for someone like Carl Icahn, I don't think it'll fail us too badly. I am a little curious, though, because you touched on it a little bit now twice. Last week's rally, I think you'll agree, was a lot of shorts being covered. And we saw today, I haven't checked the market's action actually for a couple hours, but last I saw, the market was going down as we kind of expected. Are you sort of seeing anything that is negating that idea, or what are you looking at? Yes, confirm that the markets are down over 1% right now. What are you looking at that's confirming or not proving this?
Sure. So first of all, I actually think there are, I don't have the numbers off the top of my head, unfortunately, but I just read this morning, there was a huge influx of buyers last week. So what that means to me is that lots of people believe that we did bottom last week. And that's kind of what happens. Like everybody's freaking out. Then we have a good day and then we have another good day. And suddenly everybody starts paying attention, like the bottom's in, the bottom's in. And so they start flooding back into the market. And then we had a huge options expiration on Friday as well. That really balloons the amount of volume, the trading volume that goes on. I just think there's a lot of optimists, and I'm a natural optimist, right? But I'm a slave to the system I've built. So I've built this trading system that tells me when to buy, sell. It's completely non-emotional. It goes back to what Icon said, the same as Buffett, right? Buy when others are fearful, sell when others are greedy. That kind of concept. It's you got to do the opposite of what your fight or flight response is telling you. When you are panicking and you're just dying and you're watching your account go down and you see right across the board and you're like, I'm never going to retire. I'm going to work forever because my account's going down. That's actually when you want to be buying. But most people hit the sell button in a panic, and vice versa. You know, when it's, to your point, when the markets are, you know, ballooning up and everybody's partying and it's parabolic and everything's green, you should be taking profits then, or just, you know, doing nothing. But most people start buying right there. So last week's rally, I think, was just a fake out. Why do I think that? Because, well, first of all, my whole worldview that I view my investing and trading is based on my macroeconomic view. So getting back to what we earlier talked about, I think everything is ugly. And I think March, April, May figures are going to be even uglier than what we've seen so far. So we have, there's just ugliness out there, and most people don't realize that. I think most earnings of companies, the S&P 500, they're actually going to be basically flat to possibly negative year over year, and that's not good. So you don't ever hear about this on like CNBC though. They're going to tell you like, oh, AT&T beat by a penny. That's awesome, you know, and then, you know, and they're going to wonder why it crashed 7% after that. And it's because things are decelerating in a really rough way. So people are going to start realizing the economy is hurting. Companies are going to start coming out on their quarterly reports, on their earnings calls. They're going to be saying, you know what, we didn't do very well in the first quarter, and actually it's not looking too hot for second quarter. And that's when people will start losing faith. Those kind of moments are when the floor drops out of markets and we see almost a capitulation type event. So I'm really curious to see how Bitcoin is going to handle this. I said about a month and a half ago when I was having kind of a spar on Twitter with some people who were very bullish about the price of Twitter. I said, I think what's going to happen is go back and look at the fourth quarter of 2018, starting in September. So if you guys remember, everybody remembers that who was in Bitcoin. The beginning of 2018, or like the end of 2017, we were up at about 20,000. It dropped all the way down, kind of wobbled down, but down to about 6,500 mid-September. And then it went flatline. And that's what I said. I think it's going to happen. It's going to go flatline, and people are going to wonder, maybe it is a safe haven asset so far. Maybe it will buck this trend. I think markets like the equities market, stock markets are going to grind lower. I think Bitcoin flatlines, and then it's going to be super rough because the floor is going to drop out. And that's when you can have a capitulation event. When that happened back in November of 2018, it dropped 50%. The other time it happened where we had a capitulation was in March of 2020. It dropped 50%. Those were painful. If you guys lived through that, you know that that's painful, but those are where legends are made. Those are where you back up the truck, you sell your kidney, you sell your lamps and your lava lamps, and you buy as much Bitcoin as you can buy. And you're going to be telling your kids about how you bought Bitcoin on that one day or that 1 month where it was just this epic buying opportunity. So I think, obviously, this is not individual investment advice. I can't see the future. I didn't come from the future. But I think that that's, in my mind, the most probable event is that we're actually going to see sideways choppy, decreasing volatility in the price of Bitcoin, and it drops. I'm literally like praying that it happens right before the Bitcoin conference and we bottom, and then I can come on the Bitcoin stage and be like, dude, time to buy. Dr. Bearish is Dr. Bull, time to buy. That's what I want to have happen, but because I want it so bad, that means it won't happen. So just be careful, because I think that could happen, and you want to have some dry powder saved up, some cash for buying a little more if that does happen. Because man, if you can buy Bitcoin for under 30,000, possibly around 20,000 a Bitcoin, that's awesome.
Dr. Jeff, you know, you got to help me. Maybe me and Q take out kidneys in order to sell them on the black market so we can get more Bitcoin. But definitely on the conference, if you go to Dr. Bull, I can just imagine you walking out on stage and Stone Cold Steve Austin smashing some beers and drinking them with the shirt on.
Yes.
Now, as a guy who's running the stream, I'll selfishly want that so we can catch that for all the clips. No, but all joking aside. So Jeff, while something like this is occurring, are you stacking cash? Are you stacking gold? I guess for the trader perspective, I'll give people my personal background, and this is just not financial advice, but I know for myself, I knew I had a big tax bill coming up this year, so I've been stacking cash on the side to cover that bill. Long story short, I sold a bunch of my equities in 2020 and then early 2021 in order to buy more Bitcoin. And now, we're in 2022 and the tax man's collecting. I had a couple other expenses come up with moving and stuff. So I know I've kept my DCA the same that it's always been. Obviously, when we go super negative, I bump it up or I smash buy stuff. But I'd like to know what your perspective is. Are you stacking cash? Does your fund not let you do that? Or do you have to be in another form of equity or something like that?
Yeah, so great question. So my hedge fund, I can basically do whatever I want to, right, for optionality wise. And then Vailshire has separately managed accounts, aggressive, moderate, conservative. So my conservative accounts obviously are the most conservative. Those are long only. I don't do any hedging in there. And then going up to my aggressive accounts, they're kind of like my hedge fund, but not quite as volatile. I don't have quite the options that I do. So I have these two camps. I have my hedge fund with all of my optionality and conservative accounts. Let's start here. Conservative accounts, long only accounts. What I strongly recommend is exactly what you were talking about. I go to cash. So the easiest way to hedge when you're concerned about something. Now I use things like, besides my macroeconomic things in my head, I also use like momentum factors and I use volatility and these other things to create this whole trading system. I invest in what has positive momentum and it makes sense from a macro standpoint. So like, what am I long right now in my conservative Vailshire accounts and all my accounts actually? Energy stocks, so oil is crushing it, right? Gold stocks are crushing it still. Platinum, I own some platinum. What else am I long? Defense sector stocks like Northrop Grumman, Lockheed Martin are doing well. Other traditional safe haven stocks like Hershey's actually do really well, and they just kind of buck the trend, and the people treat them like gold almost. So those are the kind of things I'm long. I have a huge cash position, and then I'm short a ton of things. So I'm short tech. I don't have any problem shorting the FANGs. I love Amazon as a company. I'm usually long Amazon, but I'm short Amazon right now. I'm short things like crypto exchanges, which are fun. I love to short Ethereum, so I'm a short the Grayscale Ethereum fund. That's my saying. Anytime I'm nervous about the price of Bitcoin, I love to short Ethereum because it's just sort of it tends to go down even more if Bitcoin goes down, as you guys know. And I don't have a problem shorting it. And then other things, basically anything. So right now, if you look across the sectors of, you can break down the stock market into like, consumer discretionary, consumer staples, energy, tech stocks, blah, blah, blah. You can go through each of those and almost all of those are in bearish formation right now. They're all in a downtrend. They're all making a series of lower highs. So anytime those things spike like they did into the end of last week, I short the heck out of them, and I'm short all of those things right now. So that's what I recommend from my hedge fund perspective. And then again, those long only things, I'm in a huge cash position and like probably 50% cash, although it fluctuates. And then the rest in those other stocks that I mentioned, those specific sectors.
Anytime I hear about the FANG stocks getting shorted, especially right now, I think it's one of the most brilliant times. You touch on Amazon, and my initial thought is literally, oh, they're so screwed between all the planes, all of their shipping, all the vans and the fleets that they have. Like they're going to be wrecked with gas prices. Are there commodities in particular that you're paying attention to that are dictating some of these trades?
Yeah, I mean, the commodity, the most obvious one is the one I'm actually paying the most attention to is oil, right? So oil, when it ramps up, it actually carries inflation with it. So we're seeing these really high CPI and PPI numbers not completely, but a major factor is oil. And what's so interesting about it, so oil ramped up, it went partially parabolic and then it rested. I think it's going to shoot higher still. I don't know how high it goes, maybe 150, maybe 200 a barrel. So I've heard 300 a barrel. I think that's a little much, but somewhere in that range. Now, people in the commodity sectors understand that the cure for high prices is high prices, right? So if you have such a high price in oil, to your point, Q, it literally shuts down industries. You have Amazon and you have FedEx and you have airlines and you have all of these industries. You have individual truckers who have to pay for gas. When it gets to be so exorbitant, people just can't afford it anymore. And so industry actually shuts down. And so when the prices ramp up, it reaches a certain threshold where people are like, I'm out. I got to shut down. I got to just take a break because I'm losing money by driving my truck right now, or I'm losing money by flying this plane right now. So suddenly demand drops. And then this price that went parabolic to the upside on oil is going to drop down like a rock. And when that happens, I'm telling you guys, since 1970, every time oil has gone up about 50% in price, it always 6 out of 6 times since 1970 precipitates a recession shortly thereafter. And that's because just what you can think about, right? It's shutting the country down and it's shutting the world down. And we like to think that we're not completely reliant on oil because, we're moving to these other greener sources of energy and things like that, but we're still very reliant on oil. And so that's what I think is going to happen once again this time. So I'm paying very close attention. I'm long these things now. And in part, I do that so I can really keep a close eye on, because I'll keep an eye on whatever my portfolio is doing. And so if I see these things go from this kind of raging bull market to suddenly they plateau and then they drop, I'm going to get out, and then I'm going to start warning people on Twitter like the floor is about to drop out. This is when capitulation happens. This is when everything goes down. This is when, even if you hold gold and you hold treasuries and you hold safe value stocks, people are just like, I'm out. I hit the sell button, panic, I'll sell it at any price. And then that's when hopefully us who are holding cash right now, we'll be sitting here waiting for this to happen, and we'll catch you at the bottom, sure, I'll buy your stock for 80% lower than it is, or sure, I'll buy Bitcoin at 20,000 a Bitcoin. I'd be happy to, and so that's how I'm looking at it. I'll probably be wrong. I think I'll be partly right and partly wrong based on experience, so I don't know what I'm going to get wrong, but I'll get something wrong. But that's kind of the playbook that I'm looking at for the coming 2 to 3 months.
Jeff, expanding on that, coming from a guy who's never owned bonds in his life, I've avoided them like the plague and have done pretty well by doing so. But I know Dylan Leclerc, our own senior analyst here at Bitcoin Magazine, talks about whenever the 2-year crosses the 10-year, aside from him assuming oil prices, I've never lined up those two charts, but that's a great point. Do you think, I know we're eerily close to the 2-year crossing the 10-year, and historically that either precedes a recession or a really big depression. Do you look at that as well? Because I know Jeff Foss always brings up, debt or credit markets are the dog, while equity markets are the tail on the dog getting wagged back and forth. Is that something that you look at as well? And do you want to expand on that?
Yeah, absolutely. So that's definitely a factor to consider, because whenever the 2s and 10s invert, that has always led to a recession. Now, I always want people to remember, just because it always has doesn't mean it always will. So you should always keep that in mind. Never say never, never say always, because there's always exceptions. All right, and I just said always, but so just be careful. But yes, so in the end, so when you see the 2 and 10, when you see the yield curve invert, within 6 to 24 months, there has always been a recession to follow. So you don't know if it's going to be 6 months or even sooner, or if it's on the longer end, 24 months out. It's hard to say. So do I think a recession is imminent? Yes, I do. Check that. Do I think a recession is inevitable? Yes, almost certainly. I think we're almost certainly going to get a recession within the next year. I don't know when it's going to happen. Do I think it's imminent? Not necessarily. It depends on what oil is doing. It depends on how fast it takes for the yield curve to invert. I actually think we might have, again, based on what I'm looking at, I think, in the next couple of weeks to months, we're going to see a big crash in these risk-on assets, even more than we've seen. I think we bottom at some point, and then going into the summer, I think optimism returns, and we're going to have kind of a nice summer. Most people are probably going to think we're out of the woods. Based on, it's harder to see this far ahead, but going 9, 12 months out, it looks like it might turn ugly again. And so at that point, we might actually get the recession that we've been waiting for, and that this yield curve inversion is predicting. So I think 2022 in general is just going to be sort of an ugly year. It's a great year to accumulate. It's a great year to be out bargain hunting. If you don't quit your job, please, like if you don't have income, I would make sure you have income coming in, try to build up cash reserves, and then just sit and wait, just be like a patient hunter and wait for your favorite assets. And if maybe we don't get a bottom, but if we do, you want to be sitting on the sidelines, just waiting with cash to swoop in and buy some of these things.
How much do you think what the impending pain and doom that we're about to see over the next 12 to 18 months in the markets, how much of that is a result of the propping up of the markets over the last 2 years and all the money that's been coming in both by the Fed as well as like everyone under the sun becoming an incredible investor and meme stocks and everything? How much of that is playing into what we're about to witness?
Oh, I think most of it. I think basically what we're seeing is, and this is just our lot in life until the dollar dies, is we're going to see these inflationary everything's just pumping asset prices, and then these huge deflationary busts. And then we start over. The Fed flips again, they flip back to quantitative easing, highly accommodative policies, and it inflates. And so we see these valuations go, a traditional good valuation for, say, just like a nice value stock is about a PE, a price to earnings ratio of about 15. We've seen them go from 15 to like 20, 25, 30. We've seen tech stocks go from price to sales ratios, which is, you want usually a price to sales ratio to be around like 2 for a good stock, 2, 3, maybe 4. We've seen price to sales ratios go to 10, 20, 50 for some of these like software as a service stocks, these cloud names, Peloton kind of things, these things that don't even make money, but they just, they're like hype cycle stocks, meme stocks. That's what the monetary expansion does, is it pumps these things to just obnoxiously high levels. And now we're seeing these things where we get these deflationary events where these multiples that are so high and obnoxious, they just have to come down. So it's actually healthy. Like, people don't like that, but when you do a parabolic move in any asset, basically besides Bitcoin, even Bitcoin, when it goes parabolic for too long, it has to settle down again and kind of fall into its range. But when you see stocks and just stupid companies that don't even make a profit and they do that, they have to come down and they have to reset again to more normal valuations. So yes, I think that's absolutely what's going on. And I think that this decade has a lot more of that to come.
How much blame in particular, or how much of the finger I'm trying to figure out the right idiom here, but I'm just going to stop with that. I want to blame Powell for like all of it. Where do they fall? What decisions in your mind was the Fed making that were incorrect? Was it them propping up these markets? Was it them keeping the rates near zero during this bull run? Or is it them trying to slowly increase interest rates? Or is it something that I'm not even thinking about?
I don't blame Powell in particular. I think he's a part of this system that he can't do anything about. He's just a player in the system. It actually reminds me, I'm a former doctor. Doctors are just cogs in this big healthcare system that they can't really do it. You either comply with what the system tells you to do, or you can leave and you can not get paid. Like, that's just kind of how the system works. So a lot of people get angry with doctors, but what it really is the system that they're surrounded by and stuck in. So I think Powell is part of the Federal Reserve central banking system. That's the problem. And that started back in 1913 with the creation of the Federal Reserve. And this whole concept of expanding monetary supply. And then obviously, WTF happened in 1971, right? When we got off the gold standard and fiat just became just complete fiat, worthless, not tied to anything. That was when the real trouble started. And so that's why I think, and that was marking day one of the end of our current fiat, the end of the dollar dominance. We've been seeing this expansion of credit built on nothingness. It's just pure fluff. Everybody in America knows that this is all fluff, right? Your house doesn't go up in value 30% in a year without just like, what is going on, right? And you have that in your stocks, and everybody's a genius because all they had to do is invest in a Vanguard fund, and now they're up, 200% over the last 10 years. All these things are just so obnoxious and ridiculous, and we have so much debt that can never be repaid. And obviously, the consequence of all this is runaway inflation and the demise of the dollar. And so we're in these final innings of that. I don't know what inning we're in, 7th, 8th, 9th, but the dollar is dying before our eyes. It may go on for decades, but we're definitely in the end times of the dollar. And so thankfully, Bitcoin is around, to catch those of us who are kind of, I'll say smart enough to have seen it, or lucky enough to have heard about it, right? And have taken the time to study it. So it's ugly, and it's going to continue to be ugly. I think it's going to get worse before it gets better. And please, please, please take some of your money and consider putting it into better money, which is Bitcoin, because Bitcoin is the answer to all these just insane problems. So I don't blame Powell. I blame the system. And I think it's just going to be more of the same until the dollar dies.
Go for it, Chris.
Yeah, Jeff, I was going to follow up real quick. So obviously there's a lot of FUD, fear, uncertainty, and doubt. And I'm not just directing that at Bitcoin. That's kind of markets abroad. I know, my dad just retired end of last year, and luckily he was able to take a lump sum on a pension, and basically he has a lot of money in cash right now, which is a very good position. I told him to be there. Obviously he has a pretty big 401k as well that he's been putting into, and I've kind of got him down the Bitcoin bandwagon. But I guess for Q and I won't speak for Q, but I know for myself, I'm in my late 20s. And I'm not too worried what's going to happen in the next 20 years. I don't plan to retire in at least the next 20 years. Obviously, I'm buying Bitcoin, and that's kind of my strategy. And we all believe that that's going to play out in the long term. But for some of the people that are in their 60s, I guess, what do you recommend? Is it just be all cash? Is it just I don't know. I know my dad is a little nervous that he's got a few years of cash that he can live off of, but just, he worries about his 401k. That's very hard to transition all into Bitcoin. Yeah, there's options like GBTC, but his company had a weird policy that some of it has to be in only the indexes that they offer in his fund.
Yeah. So another good question. So it completely depends on who you are as a person. If you are just like, I don't really care about investments, I have this thing, I don't like thinking about it, but I also don't want to watch it go down. For the easiest thing to do is I'll tell people just right off the bat, just put like 50% of your 401k or your IRA into cash, and just keep doing everything you're doing, but put half of it in cash and half of it just keep doing what you're doing. Then if we do have this like really rough, tumultuous year or so, and you don't want to watch your portfolio go down so much, it'll only go down half as much, right? If you're holding a bunch of cash. And then on the other side, hopefully then if we've bottomed and the dust is cleared, then you can just put that all back to work and you'll be happy you did that. I obviously, because of what I do as a fund manager, right? I look at things and I see, okay, all the tea leaves are pointing to bear markets. Everything looks terrible. All the momentum indicators look bad on most of the things. I'm the kind of person, and it's just my rationale. I'm like, why would I sit and hold something I think is possibly going to go down 20 or 30%, right? I get it. Like if you are just the kind of guy that wants to DCA and dollar cost average through all of this and just ride these bumps, that's a fantastic way to do things. You're not paying any taxes if you do that. And so you have to think through all those different things. But if you don't want to see your portfolio go down and you think there's a very strong likelihood it might, I recommend doing the kind of stuff like, besides holding cash, then look for things that are working and invest in those kind of things, And again, energy stocks are great right now. Gold stocks are great. Defense stocks are great right now. Value stocks are doing. Berkshire Hathaway, what a great defense stock. You can just chuck some money in there. Those kind of things should do well even in this type of environment. They might go down, but they're not going to go down quite as much. So that's what I tell people. It depends. I always try to figure out like, who are you? Like, do you want to like spend time like kind of trading a little bit, or do you just want to be like, hey, it looks kind of bad. I don't want to see my nest egg go down by 40 or 50%. What tip do you have? And I would just say, maybe buy a little gold, put a bunch in cash. But then if they believe in Bitcoin, which, hopefully more and more people start doing, then this is actually a great time to start dollar cost averaging into Bitcoin, especially for new people, because even though I don't think we've bottomed yet, we're close to the bottom. And so you want to buy that final little dip wherever we are on that. If you're buying all the way through this, you're going to be really glad a year from now or 2 years from now when we're up here that you are buying in this point right here.
Yeah, and I'll just continue on that. I know Warren Buffett and Charlie Munger. I know obviously I was a value investor for a while and really respect their opinions. Obviously, we differ in terms of Bitcoin. They've been slugging away cash. I think they have over $100 billion of cash on the sidelines. And I know in 2020 and 2021, basically people were like, oh, this is so dumb. You could have thrown it in a broad index fund like what they recommend and made 37% returns, at least in 2020. I know 2021, we had a little bit of a dip. I guess I'm expanding that now. So then while we're going to go through this whole capitulation and go down, what's going to be the trigger that says we're going back up? Are we going to get to, you think, 1% 1% interest rates or 1.5%, and then all of a sudden things are going to be so bad that the Fed's going to have to lower it again? Or is it going to be the crash of oil and then everything else is going to come down and then you're going to think that's more of a bottom as we rally? I guess what would be your sentiment in the long term after, what would be the start of the next bull?
Sure. Well, I'll tell you, for me, and I hate to say it like this, but it's actually really easy. I just wait till it flips my momentum indicators bullish. So I don't know what triggers it. Are we going to get a capitulation, or do we just kind of grind painfully lower for the next several months or for a year even? I don't know. Or is there a big war, or is there another COVID variant that comes out of left field and freaks the planet out, and that causes a capitulation? I don't know, and honestly, I don't care. I talk a lot about the Fed, but I don't care about the Fed, because it's the most important thing, and sounds funny to some people, but the price action will tell you. The markets actually discern what's going on. You just have to watch what the markets are doing, right? And so that's how I look at it anyway. So if I see something that's just going down, 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 and then it just kind of goes sideways and starts to go up and my indicators flash bullish, that's when I flash bullish. And it's literally that simple. And it sounds kind of funny, but it's just like, Well, yeah. I mean, it's not even, I don't care why it does. Lots of people cogitate all day on CNBC and Bloomberg and whatever else, trying to figure out what. There's nothing wrong with cogitating, right? It's good entertainment. It's info.
No, I need to stop.
But it makes it. I will tell you that I've almost never met a really good investor that invests based on what they think the news is going to do. Like even last week, they're like, 2 weeks ago, everybody was panicked about Putin and Russia and Ukraine and all this stuff. Last week, we were having like literally almost exactly the same headlines, but the headlines were people aren't as concerned this week about Russia's invasion, and the Ukraine is like standing up, and that's good. And so that's why stocks are going up. And I just don't buy any of that garbage. I think it's all just the prices do what they do, and I don't care why they do it. And when they flip bullish, I'm flipping bullish, and it's just honestly that simple. And what's good about me, right, is I'm open source. I want to help as many people as possible. I know there's tons and tons of people out there that can't afford to pay the guy like me to manage their money. I literally go on Twitter and say, hey, I'm bullish now. Like, hey, here's what I'm buying now. Like, hey, you know how I was shorting Amazon and I was shorting tech stocks and I was shorting this and that and crypto exchanges and blah, 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 blah. Hey, I'm long now. So obviously I have reasons for doing what I do. And obviously like the system that I've built over the last 8 years, when it tells me that, that's just what I do. And that's what I follow. I don't know what news event will cause it, but I'll be a slave to the system I built.
Jeff, don't give away all your secrets too cheaply now. Now people are going to be rushing to follow you, and they're just going to follow your hedge fund signals. I guess expanding, and not to get political on this, but expanding more to the Russia-Ukraine thing. So obviously Russia, whether I do not agree with what Putin did, his attack of Ukraine, and it's just an atrocity on both sides. War is horrible, horrible, horrible thing. But with that being said, obviously it's in Russia's best interest, and I'm not supporting them, but it's in their best interest to try and never use the US dollar again. I know that's a little outlandish, and that's like a really broad comment. And I know a lot of people say Russia has ties with China to do a digital yuan or to subvert the US dollar. But what people don't realize, and we've talked about the death of the dollar before, is being the global reserve currency means that you need to push your dollars, the Triffin dilemma, I believe is what it is, where you have to export your dollars to everywhere else in the world in order to reap the benefits of being the global reserve currency. Obviously, we have a peg, it's called the petrodollar, to the barrels of oil. But with that being said, won't we see a lot more pain in the markets if Russia, if China, if all these other countries, well, we could just start listing countries that we've hurt in the past, whether it's Iran, Iraq, Afghanistan.
Smack you in the face.
Iran, Afghanistan, or countries like this that have, let's just say, oil-rich nations that decide to opt doing their system. Obviously, that's going to tank the stock market. That's going to tank a lot of things because the dollars aren't finding their ways to prop back up into the stock market. And we could be in a long Great Depression. I hate to bring, fear of, we're going to see 10 years of Great Depression, but that's definitely something that could happen with this. I guess, what are your insights on that at all?
Okay, so several opinions. One is I would say careful with what we think will happen because we just don't know what will happen. We might be surprised to the up, sort of like what happened. Ray Dalio talks about he was working like the market floors, a trading floor back in 1971 when Nixon announced that we were coming off the dollar standard. He came into work the next day thinking the market was just going to tank and go to zero, basically. And what did it do? It went up, and the market's just jacked up after that. Why? Hard to say. You can kind of cogitate again on why it happened. I don't really care again. So here's what I think is going to happen. I think what is going on in Russia, and this is probably my tinfoil hat, but I actually think it's pretty valid. I think Russia and China have been planning a way to get off of the US dollar system as the reserve currency since early last decade. So 2012, 2013, and 2014, they intentionally stopped buying as many U.S. treasuries. They started making a noticeable decline in their purchases because they, I think, figured out that, hey, we're literally supporting our enemy, the U.S., by and their military by buying their treasuries. They're borrowing as much as they want, and we're giving them the money to do that. That seems kind of weird. So I think they figured that out, and China distinctly made, who used to be the largest buyer, they stopped buying U.S. Treasuries for the most part and started buying hard assets. They started buying commodities. They started buying land. They started doing all this other stuff. They've been doing that since 2014. Who has picked up the slack? The Federal Reserve. The Federal Reserve has been printing money to buy the debt of the United States. The United States has been buying the debt of the United States, eating itself. And who pays for that? The citizens who hold the dollars, because the only way to do that mathematically is to devalue the currency as you're doing that. They're printing more and more dollars. They're buying more and more debt that can't be paid in sound money, so they have to pay it in less sound money. And anyways, we're getting off subject here. Russia and China, I believe, have been planning this for about a decade. They wanted to get kicked off of the US dollar system. They now have an excuse to say, hey, look, you kicked us off, right? Russia got kicked off by the US. Out of the SWIFT system. Their FX reserves were like stolen basically from them. And they're like, okay, I guess we're going to come up with our own thing. My view, I'm looking 10 years out from now. Here's what I think is going to happen in the next 10 years. I think 10 years, we're going to look back at this event and we're going to say that was kind of a milestone event. In 10 years, there's going to be 3 currencies of significance. The US dollar will still exist, but it will be substantially weaker and less powerful unless they start putting Bitcoin on their reserves, on their balance sheet. 2 is the Chinese yuan. This Chinese CBDC, I think, will have a huge presence and much bigger than it does today in Russia, in most of Asia, in lots of Africa, in parts of Central and South America too. Basically, whoever is friendly towards China today will sort of move on to that as a reserve asset. The people who are friendly to the US will stay on the US dollar system. And then the third, obviously, is Bitcoin. I think all other currencies are going to slowly die this decade, and they're going to fold into one of those 3 things. And at first, I think it goes mostly into the US dollar, then a little bit more will start going into the yuan, and then the Bitcoin will be this kind of rising dark horse, obviously, that we all agree on. And that will be either seen as just a standalone reserve currency or as a backing to these other 2 currencies. China and Russia are using hard assets and gold. They're kind of going with the older playbook. And hopefully, the US will start putting Bitcoin on its balance sheet as a reserve asset. That will strengthen the currency and give it a soundness that it currently obviously does not have.
I'm curious, where in this trifecta scenario, if it is at all involved, does gold fit into the equation?
I think China and Russia are trying to make it part of the equation. They've clearly been net buyers of gold. China basically, if I understand it correctly, nationalized all of the miners, and they're basically keeping all of the gold that they mine. Russia has been buying lots and lots of gold over the last many years as well, and not buying U.S. Treasuries. And so I think they're actually trying to go with the old school playbook. And I think also that's where they made their strategic error, right? I very much believe, I'm a believer again of Ray Dalio, his rise and fall of empires. I don't know if you guys read that, The Changing World Order. I totally agree with that. And I think America, we've peaked, and I think we're on the decline. And I think that China is rising, and he's clearly laying that out in his book too. And we're headed for some sort of confrontation at some point. I think China is sort of next up for the next major world power, and then therefore the next major world's reserve currency. They made a critical error last year by banning Bitcoin and kicking it out of their country. Bitcoin is literally like this out of left field. It's like a meteor from outer space that just came, and it's literally going to disrupt history and disrupt the geopolitical world order. And so there's a chance that will disrupt their ascent if they continue to be anti-Bitcoin, because Bitcoin is antithetical to centralized control. It's antithetical to a surveillance CBDC coin that they have and that most other countries are going to go to. That is so much wealth creation and stability that they're pushing and forcing out of their country. That could literally change their ascent from being, I think, from being just an absolute shoo-in to now, I think it's kind of 50-50. If some other country gets smart, basically like if someone who has substantial size and clout, like and pulls in El Salvador, but they're actually like a big country. So like say the US does that, or say Canada, or some, substantial country pulls in El Salvador and makes Bitcoin their reserve currency and does it far before everybody else. The game theory says that they will have such an insurmountable lead that other nations might not be able to catch up with them. So if I were the leader of a country, that's like literally agenda number 1. That's what I would do today. I would be like, hey, look, we need to get Bitcoin miners going. We need to start getting our volcanoes going, man. Let's put a Bitcoin miner on Old Faithful over in Yellowstone, and let's start mining some of this stuff. And let's start strengthening our currency and start thinking 10, 20, 30, 40 years out from now about how we're going to change our outlook from this slow, painful decline that the United States is on to back towards an ascent and a ascent towards greatness.
You heard it here, folks. Future President Dr. Jeff Ross says, turn on the money printers and let's start buying Bitcoin instead of treasuries.
Exactly. Single issue voter, man. That's what I would do.
Yeah, definitely. And Jeff, I think you outlined pretty beautifully that China, we've talked about this before, 2007, 2008 was definitely a milestone in terms of the US dollar with the financial collapse that occurred then. And obviously, when we were printing all this money to prop up our economies, bail out banks and all this, the ones who weren't getting the money, China. So when they had these flat rates of government debt, whatever it is, 2 year, 2%, 3%, 4%, whatever it was back in 2008, well, we're printing all this money and they're getting a flat rate of return. Basically, the way that we were able to pay them and subsidize them and guarantee that money was printing more money, but it devalued the treasuries that they did have. So obviously China in 2014 was very pissed. They wanted reparations for that. And they decided we're no longer buying treasuries. And what they did is the Belt and Road Initiative that many people have heard, where basically they were buying hard assets of all these countries that needed infrastructure. So dollars would go to China, China would send us goods. Then they take those dollars, instead of buying treasuries, put them all around the world. And that's kind of a way that they've become, like what Ray Dalio has outlined, more of a global powerhouse. Obviously, a lot of these countries have dollar-denominated debt that they owe to China to do this. But China would like nothing more to push this digital yuan to those countries. I'm assuming, exactly to your point, Jeff, that in the near future, and they are going to be putting or making people pay their debts in just the digital yuan. And obviously that becomes with great power that they can transform or basically negotiate what they can do to pay that back. If you're not doing X, Y, and Z, if you're not taking our vaccine, if you're not, doing, buying Chinese products, if you're buying US products, we fine you or make it more expensive. It gets to be a very dangerous game. And I don't think many people realize that, where Bitcoin is the counterpunch to all of that. I don't know, Q or Jeff, if you want to comment on any of that.
Q?
Oh, I would love your thoughts on this. I think I've touched on this quite a bit on this show enough.
Sure. So, I just agree with everything you said. I just think we're at this transition point right now. And I think that China is in Russia, again, they definitely, I don't think they're stupid. I think they're doing what they're doing for a reason. I think they have a plan to create basically the next petrodollar gold back yuan, so basically the petro yuan in CBDC surveillance form, which is just awful, by the way. CBDCs are terrible. They're everything fiat offers and less, and just it's just such garbage. So anyways, we're clearly moving to that, and thankfully we have Bitcoin as an alternative and an antithesis to that. But yeah, I think that's just kind of inevitable, and I think they're playing it smart. But again, I think the one huge glaring mistake they're making is they're following the old world playbook. They're basically copying the U.S., what the U.S. did to rise to power, and I think they're going to try to do that and sort of force their way in. And I think they're making a strategic error if they don't incorporate Bitcoin into their strategy. So obviously, I kind of hope they don't, because I don't want to see that world necessarily. I would love a world where Bitcoin is just the power of Bitcoin, right? So whoever controls the money has the power. Whoever controls the money printer literally controls the power in the world. And so if that control goes from the US, which there are lots of reasons to like that, but probably even more reasons to not like that, if it just transfers over to China, there's just going to be lots of the same kind of problems we're having today. It's just going to be to the China's advantage. What I love about Bitcoin is its decentralized nature. It literally spreads the power of money ownership and control to the people around the world in that decentralized manner and totally secure manner as well. So that's the kind of world I want to see. I think most people who understand Bitcoin and who are in it for the long haul, that's one of the main reasons they're here. It's literally just better money for a better world. And it will help to kind of end the run of huge, powerful nation states and these just terrible wars that go along with it. I think that it will make those much more expensive and much less frequent and much less likely to happen. That's my hope with Bitcoin.
Ultimately, power will always corrupt those who have it. So I'm with you there. I want to ask you this selfishly, because I do agree that the worst is yet to come on the markets. I myself have a very heavy cash reserve, but I also get very uncomfortable with inflation just continuing to creep up, whether it's my rent, whether it's me going to the grocery store, whether it's just filling up gas to go see friends. Am I overthinking it on a month over month basis, or is there a better place to be parking money as far as just like for a 6-month period of time? I'd love your thoughts on that.
Yeah. Well, so again, the easiest thing is just a dollar cost average into Bitcoin, right? So, and I know you guys are doing that. I'm doing that too. Just slowly, little by little, converting my fiat into real money, real sound money. But people get uptight when I talk about cash. Look, I'm not stupid. I understand cash, the value is devaluing like month over month, year over year. But there are periods of time where you want to hold a safe haven asset. When everything is just falling to the ground and falling apart all around you, the US dollar still is, like it or hate it, still is the world's reserve currency. It's still the safe haven asset that people go to in risk off situations. So if we think we're going to have a serious risk off event, you just want to hold cash. I'm not saying hold cash for decades. That's really stupid to do that. I say that I've tweeted this several times. Bank checking and savings account are where your money goes to die. I really believe that. You're literally just saying like, I want to be poor 10 years from now if I put my money in the bank. So that's my view for the long term. For the short term though, there are seasons. There are seasons like I'm totally with Greg Foss. I'm totally anti US treasuries and bonds. Nobody should ever hold these things for, more than a short period of time. There are periods where they outperform though, and where you can actually make money holding US treasuries because they are safe haven assets. And when everything else is falling apart, when people are selling stocks and even selling, their crypto, some people sell their Bitcoin, which I never recommend. Treasuries can do well. So can gold. I would not hold any of those for the long term, but I would hold those for a very short period of time if I feel like the floor is going to drop out. And then I would quickly convert them to Bitcoin for sure at number one. And then maybe if you have your eyes on stocks, real quick tangent, I love investing. Obviously, I love saving in Bitcoin. That's the most important thing. I think the majority of people's portfolios should be in that. But I also love investing in companies that I feel like are changing the world for the better. And then I can find them at a good price. So if I see some company that I like and I want it to succeed, like I just like this company and I think that it will also be a profitable investment, I love to invest in those kind of companies as well. So I look forward to these big market dropouts, these flushing events where valuations go from whatever price to sales ratio of 20 down to a price to sales ratio of 1 or 2. Those are when I'm going to be licking my chops. I'm going to be taking this cash I have on the side and putting some into these companies and putting them to work for the long haul.
It's funny how easy it is to buy Bitcoin, especially in 2022. Mm-hmm. It's not as easy to buy just like a solid brick of gold. God help you if you actually wanted to try, as I like to tease my dad from time to time, we should have just been storing some oil in some of the empty bedrooms in my parents' house when they were paying you to essentially store oil. Mm-hmm. What effect are you paying attention to in the public markets as far as Bitcoin? We had Goldman Sachs claim something about they essentially completed a successful options trade using Bitcoin. We keep pushing for a Bitcoin ETF. When that day will come remains to be seen. Is there anything in the public markets in relation to Bitcoin that you're really keeping a close eye on?
Well, first of all, I think about 90% of the news that comes out about Bitcoin is wildly bullish for the long term. Like we're just seeing these amazing announcements all the time. Countries that are starting to contemplate it. More countries are thinking about making it legal tender. Companies want to put it on their balance sheets. All of the huge old school banks are starting to offer it to their clients. Their trade, so everything about it to me says the Bitcoin network is in full expansion mode. We're watching the infrastructure layer get built out. I love that, especially from being a finance guy. Like I want to see it be really easy to own Bitcoin and for as many people as possible. I want to see the old timers and the pensioners and the baby boomers with their 401ks. I want it to be easy for them to get in Bitcoin, even though by far the smartest, wisest, best way to own Bitcoin, right, is to own it, get it off an exchange and put into cold storage and have that self-sovereignty. Lots of people are just waiting for it to get easier. And so when it becomes more convenient, that's going to bring another wall of trillions of dollars, I think, into it. And that's where we go from a $1 trillion asset to we surpass gold and become a $10+ trillion asset. So I'm watching all of those things and I see basically nothing but good news. Even politicians who are saying like negative things about it, it's clear if you take a step back and you look at the progression over the last few years, we've gone from basically nobody talking about it to a couple of weird people talking about it to people basically just bashing it, to now there's a good number of politicians who come out publicly and say they're pro Bitcoin. And I think obviously that's just a trend that's going to be another inevitable trend that we're just going to see. And pretty soon everybody, kind of like everybody is like 100% in favor of the dollar because you have to be, because that's just what's ubiquitous. Bitcoin will at some point, I think, be forced on everybody and become ubiquitous in the world. And so we won't even talk about it anymore because it's just, it's just what it is. So I look at all those things with favor. Again, I don't make any of my trades based on that kind of thing. All of that does is give me lots of confidence that Bitcoin over the long run is still going way up here and we're only way down here right now. And so I don't know how fast that will go, but I do know that at some point it will be up here. And it just gives me tremendous confidence that just buying and holding it for the long term is a really, really sound strategy.
One last question, then we will let you get back to your real job. We know already the perfect legislation is adopt Bitcoin as legal tender. Is there any other specific legislation, or on the other side, any other legislation you'd like them to not pass in regards to Bitcoin?
Some legislation I'd like to see, well, regarding the legal tender thing, I would love to have it not be a taxable event every time we want to buy it. Like, I want to be on a Bitcoin standard. I want to just buy it. I want to own it. And then I want to, if I need to buy a lamp or something, or I need another lava lamp right there, I need another one that I can, sell some Bitcoin, buy a lava lamp, and I don't create a taxable event. That's such a hassle and it's so ridiculous. So I would love to see them pass something like that where they quit treating it like it's real estate and treat it just like it is. What I think it is just a better money. It's just a currency. So I know a lot of people don't like that for other reasons, but to me, I think that would be I think it's inevitable, by the way, that that's going to happen. But I wish it would happen sooner than later. Something that they don't pass, I think we got to be a little bit careful about what we wish for as far as getting too many politicians on board, because they may take it with their legislation in directions that we don't want to see it go. And so I would just instruct people to try to be as careful as possible and to always consider Bitcoin as it's outside of the system. So think of it as this just perennial outsider that it has its own deal, its own protocol. It's very different from the fiat system, and that's what's good about it. And so try not to fold it into the fiat system too much. Like, even for instance, like I'm going to kind of double speak a little bit. A huge event for Bitcoin will be when we when the SEC approves a spot Bitcoin ETF that will bring in a flood of money. But that's not necessarily what's best for Bitcoin or for Bitcoin users. The best for Bitcoin users is to own it yourself and have self-custody of it. The ETF will make it really, really convenient, but now we're centralizing it and we're creating a whole different type of risks, custody risks and other kind of risks to that Bitcoin. And so careful what you wish for. That may make the value go up, but it may kind of steal a little part of the soul of it all. And so just kind of keep fighting for what's right is what I would say. Kind of like the founding fathers in the United States, right? Like, we have our Constitution, we have what we knew was right, and we've strayed a really, really, really long ways from there now, and they're probably all rolling over in their graves right now. I think that's probably going to happen with Bitcoin too. But so I think those of us who are earlier in the game, we just got to keep fighting for the ethos of Bitcoin all along the way.
Dr. Jeff Ross, I could honestly spend days talking to you. I think our time, unfortunately, has come. Can you just let everyone know where they can find you online on social medias?
Sure. So as far as social media is concerned, I only really spend time on Twitter. So my handle is @VailshireCap, VailshireCap. And then if you want to learn more about my investment style, I don't do things at all like most investment advisors do or financial planners. So, but if you kind of want to do it a different way and you want to check that out, go to Vailshire.com. I send out a monthly newsletter and a quarterly thing for my hedge fund too, to keep my clients apprised with what I'm doing. And reach out anytime. Thanks, guys, for having me on. I'm looking forward. You guys are both going to be in Miami, yes, in a couple of weeks?
Yep, we're both going to be there. So we get the privilege of spending a few days with Dr. Jeff Ross down in Miami, and we can spend hours talking about all this. You can too by going to b.cc/conference. Use the code YTMAG. Come see Q, myself, and Dr. Jeff Ross speak at the conference. Really looking forward to seeing everyone there.
We're going to What? The only person speaking is Jeff Ross. Chris and I are not being given a mic.
Oh, no, we're not speaking, but we will be there. We will be
You
speaking.
guys should. You guys are awesome. I hope next year you'll be speaking for sure.
Sounds good.
No. Guys, stick around through the commercials. We're going to leave you all in Chris's capable hands as well. So if you miss my curly hair, I'll be back tomorrow.
Yep. Peace out.